Chris here, happy Friday. Well, a lot can change quickly. A couple weeks ago, everyone was so excited about the lowest interest rates in years, and now we've seen mortgage rates, 10-year treasuries just shoot up, particularly in the last 2 weeks, over 0.5%. So right now, 30-year fixed have climbed up over 6.5%. I have a whole bunch of people who locked in the fives. Well, they're holding on to gold right now, as we've just seen these interest rates spike, not just because of the oil prices and the geopolitical tensions that's going on out there, but also now shift in global monetary policy. It's not just the Federal Reserve right now that's coming out with more hawkish statements, but around the world, central banks are talking about being more restrictive, higher interest rate policies. In fact, for the first time in years, the market is actually pricing in a rate hike versus rate cuts. So after a long period where the market was planning on rate cuts, there is now over a 10% chance, I know that's not huge, but still, it's over a 10% chance that there's going to be a rate hike in the next Fed meeting versus previously, of course, the market was pricing in chances of a rate cut. So pretty dramatic shift in the overall trend of where the market's going. And a lot of people are like, now what? What's next? Like, what's going to happen, right? Well, of course, I don't have the crystal ball. But if we look back at history, which of course does not repeat itself, but as they say, it does rhyme. Let's look at the last 16 geopolitical events. And if you did look at the last 16 geopolitical events, you'd see it took about 41 days on average for the markets to get back to neutral. So, a couple standout geopolitical events. First, I'm going to start with Pearl Harbor. So, after the attack on Pearl Harbor, the market was immediately down 20%. And it took over 300 days for the market to recover. But a year after Pearl Harbor, the market was up 11%. Another one that I think is important to note is the conflict in Kuwait. So initially, after the conflict in Kuwait, we saw the stock market go down 17%. And it took 189 days to get back to neutral. A year after the start of the Kuwait War, well, the market was up 14%. So I do think this is a disruption. Do I know how long it's going to take to get back to neutral? Of course I don't. But, you know, we do have midterm elections coming. So if I'm a betting man, if I'm a guessing man, I'm thinking that there's a lot of pressure on those in charge right now to get this wrapped up in the next 30 to 60 days. Hopefully the markets can settle down a little bit and we can get a little bit of relief, particularly in the bond market, which has just been absolutely obliterated and mortgage rates are paying the price. Of course, if you have any questions about financing a home, give us a call, let us know, and happy Friday.